Welcome back to James Market Forum. This week, I paid attention to the crypto market and took a trade on BTC USD. Instead of simply showing the result, I'm going to explain the entire thought process from higher time frame analysis down to my entry and exit. The first thing I looked at was the higher time frame. The market was bearish because price continued respecting the weekly market bearish order flow, creating lower highs, lower lows, lower highs, and lower lows. My bias was to only look for sales. But before we start selling, we need to find our liquidity. We had the previous week high liquidity and the previous week low liquidity. Waiting going into my throat like this. As you can see right here, this is the previous week high liquidity and this is the previous week low liquidity. I want you to take note. We had previous weekly high liquidity right here and previous weekly low liquidity right here. So when the market opened on Sunday, I expected institutions to target this area before making the real move downward, targeting previous weekly low liquidity. So another confluence you need is knowing whether price is at a premium so that you can sell confidently. So using our dealing range tool, the Fibonacci tool, from this high to this low, you can see that price is trading inside the premium area. You can see it right here. Price is trading inside the premium area right here. Since my bias was bearish, selling from premium made more sense than chasing price. Do you understand? So we are going to do it together now. We are going to drop down to the 1 hour time frame. That's my execution time frame. So let's go on the 1 hour time frame. Let's expand it if you have the chart more. So you can see now comes the important part. So I want you to pay attention. You can see I didn't enter the market immediately. I waited for previous weekly high liquidity to be swept. I waited for market structure shift. You can see price was doing lower low, lower high, lower low, lower high, lower low, break of structure, and continued with a bearish trend right here. So this right here is a market structure shift with an order block confirmation right here. So this is my confirmation right here. So when price pulled back into this order block, I opened my sell limit right at this level. Price tagged me in and dropped down to this equal low. And so if you have any question, just drop it in the comment section and I'm going to reply to all the questions that I'm going to get. Okay, so let's continue. When it comes to the risk, I used about 10% of my account. Yes, I'm very comfortable to lose that because I'm okay with the amount I was risking. Then when price moved in my favor, breaking this low, that was when I moved my stop loss to break even. Then I allowed the market to reach right here, to reach my target, this next liquidity level, this liquidity pool right here. You can see it's a liquidity pool because it has equal low with Asian low liquidity. So there are lots of stop losses right here. Do you understand? Right here. So this trade produced approximately 2.5%. But more important than the profit was that the trade followed my plan. Do you understand? Cool. So that's it. Every profitable trade begins with patience. Don't chase candles, wait for liquidity, wait for confirmation, let the market come to you. Just keep this craft simple. It's going to be super easy. If this breakdown helped you understand institutional trading a little better, subscribe to the channel. I post real trade breakdowns every week and teach the exact concept I use inside James Market Forum. Thanks for watching, and I will see you in the next analysis.